If you want to make money and stay longer in the day trading business, the most important thing is to manage risk. Some traders think they don't need to manage risk if they can just take the right positions. When you say you can take a good position, it's like saying that you have a good engine on your Lamborghini. When you say you don't have to manage risk, you're saying you don't really need brakes on your car. Obviously, risk control is critically important in day trading. And not only in day trading, but all types of trading require risk management. For example, in futures and Forex, one bad position without any risk control can cause you to lose more money than you have in your entire account because of the leverage. How risk is managed is different if you're a professional or a beginner. Keep this in mind. Net profit equals the money that you make minus the money that you lose. Risk management is controlling the money that you lose, and it protects the money that you make. A good trader must be good at controlling losses. There are different types of risk that you take when you place a trade. Here are some of the risks that you will make when you place a trade. First, there's price risk. This is when the price moves in the wrong direction, and we encounter this on every trade. There's also the chance that news will come out and move the price of the stock in the wrong direction. There's also the chance that the power can go out at your house and you can either not be able to enter a trade or fail to get out of a trade that's losing money. Then there's also the chance that your internet could go down and you can not be able to get out of a losing trade. Then there's keyboard risk, where you accidentally hit a key by accident. This is very common in the beginning, which is why we put you on the mouse to start, at least. So, how to set your stop loss target. When you have a trade that you're getting in, you want to have a profit target that's at least 3 times greater than what you're risking. So if you determine to place your stop loss price 10 cents below where you buy, that means your profit target needs to be at least 30 cents to be worth taking the trade. Okay. Now, there are different places that you can put your stop loss price. You can put it, typically it would go a little bit above or below the breakout line, because if the breakout fails, you'll need to get out. You can also set your stop loss a few points above or below the gap. If it's a gap up, then it'd be a few points below where you buy it. If you can also set your stop loss a few points above or below the support and resistance line, like a horizontal support or resistance line or a slanted moving average line. Big positions can bring you more profits, but they can also cause bigger losses. You never want to use overly large positions, even if you believe this is absolutely a very good chance to enter a trade. Instead, you want to consistently use smaller size until you have a steady profit, a winner. Then you increase your size when you get to be a more advanced trader. What you don't want to do is add to a loser. That's a recipe for disaster. I've seen many a trader do that, and it never works out good. So what you must do is you must exit your trade if it reaches your maximum loss. You don't want to add to a position if your first position is losing money. Don't try to fight the direction of the market. Don't fight the trend. You can't change the direction of the market. You have to go with whatever the market is telling you it's doing and trade based on that information. Okay, you need to exit your trade if movement of the market is trending against you. Now, what you must not do is fight the trend or hope that the trend will turn around when it's already moving against you, and definitely do not add to a losing trade. You want to leave your desk and take a 10 or 15 minute break if you have a series of winners, because you need to be calm and focused at all times and relaxed. You also need to take a break and leave your desk if you have a series of losers. Again, you need to be focused and clear-minded at all times. And if you can't stay focused, if you're not clear-minded, if you're not sharp, don't trade, okay? You need to take a break, take a rest, get something to eat, do whatever you need to do so you can be sharp and focused when you trade. Risk management is definitely the most important part of trading. Use risk management on every trade. Cut your losses without hesitation when it hits your stop loss price. Cutting losses at your stop loss price is good trading because it limits your losses. Cutting losses at your stop loss price is required. It's an absolute must if you want to be a successful trader. So go ahead and take the quiz, and when you're ready, move on to the next lesson.